Hi, this is Owen from All About Braces and Colorado Orthodontics, and today I'm going to talk about FSAs, HSAs, and how they apply to paying for braces. I'll give a quick overview first of all of what those are, because for a lot of folks it's just a bunch of letters put together. Put simply, an FSA, which stands for Flexible Spending Account, is usually a program done by large employers that allow their employees to put aside money before that money is taxed. And when I mean taxed, before income taxes are taken out of that money. The IRS has set up a program that allows people to use that money that's set aside pre-tax to pay for medical bills and never have to pay taxes on that earning. It's a tremendous advantage for most of us who are in maybe a 25 or 30% tax bracket. You can figure that that's the savings you're getting if you're using that money to pay for medical expenses. Now, there are rules and limits. The FSAs, again, flexible spending accounts, have limits as to how much you can put in. Last I recall, it was about $2,750 per year, but of course, as this video lives on, that may increase or change over time. Additionally, you may hear some people be concerned about FSAs because it is a use it or lose it program. And what I mean by that is if at the end of the year you do not use all the money that's set aside in the FSA, the IRS gets to keep the remaining balance. An HSA is somewhat different, albeit that it's another way to avoid paying taxes on medical costs and bills. An HSA stands for Health Savings Account. And that's usually done through a combination of both getting a HSA eligible health plan, because that is one of the requirements, and then working either with your employer or your bank to put money after tax, after you've already had the income taxes taken out of your earnings, put that money into the health savings account. Now, as I said, that's after tax, and many of you would say, well, I don't understand, you just said there was going to be a tax benefit. There is. And that tax benefit comes when you file your taxes in the spring. You note how much money you used out of your FSA, and all of that money then is adjusted as far as the amount you owe the IRS at the time that you file your taxes. So again, that does become tax-free earnings, but it's only done later on when you're filing the taxes at the end of the year. Now, the nice thing about the HSAs is they never expire. That money is always yours, and it can just roll over from one year to the next. There is a limit as to how much you can put in or use in a given year. Last I checked, again, this was closer to $6,700 for HSAs. But all that money that you do use during a year for medical bills is tax-free. Now, how does all this apply for braces, and why am I from All About Braces telling you about it? Well, HSAs and FSAs are fantastic when you know that you have a known medical expense coming up in a coming year. While FSAs are use it or lose it, if you know that you owe the orthodontist $2,000 in the coming calendar year, you could always make sure that you don't put in any more than that, but put in $2,000 to an FSA if one is available to you, and use that money to pay the orthodontist. The other nice thing is because orthodontics is a service that's delivered often over a vast period of time, 18 months, 24 months, something of that nature, rather than a point-in-time experience, which is, say, if you needed to have a surgery, you have the surgery, it's done, it's a point-in-time experience. But because braces are spread over a couple of years, there is the flexibility of the orthodontist to bill you for those services in various increments of their choosing. And as such, that does allow some flexibility with FSAs and HSAs, where your orthodontist can either do something along the lines of allowing you to pay a little more upfront so that you make sure you don't lose any remaining balances in your FSAs, and taking that money in a November or December timeframe so that you make sure you don't lose that money. Or conversely, pushing some expenses back if you were about to start an HSA or FSA for the following year, and they choose to push that back into that year or allow you to do so to save on some of your taxes. So I know that we're in November now. Some of you folks may still have open enrollment where you're choosing your insurance plans and choosing whether or not you put money into an HSA or an FSA. And the suggestion is that if you're working with an orthodontist, hopefully All About Braces, you will employ one of these vehicles to help you save a great deal of money in taxes as you try to cover the expenses of orthodontics. I hope this video is helpful. We'll look for giving you a new video soon. Take care.